Mr. Stivers.
Thank you, Mr. Chairman. Thank you, Chair Yellen, for being here today. And I appreciate you have a hard job. And I just wanted to ask you a couple questions. You just said to the gentleman from Minnesota that private investment is lacking. And it is clear that you have reduced the interest rates in the economy, which is one factor when people choose to make an investment. But at the same time, it appears that the increasing regulatory requirements that are passed through to consumers through banks, including a capital surcharge on bigger financial firms that's nearly double the international average, that's 4.5% versus 2.5%, a supplemental leverage ratio that is double, 6% versus 3%, a liquidity coverage ratio that's more restrictive and punishes certain asset classes, and a total loss-absorbing capital requirement that doesn't consider things like market making that get capital in the economy. It just seems like even though you've reduced interest rates with your monetary policy, your regulatory policies are increasing cost and therefore decreasing folks' ability to make private investment and also doing it at such a level higher than the rest of the world. It just makes America a less attractive place to place jobs, financial service jobs, and other jobs. And I know you've commented that you want to try to take a look at all that, and I really appreciate your willingness to take a look at it. I know the European Commission just did a call for evidence to review the ways that their financial regulations are actually working and recalibrate the rules to support both liquidity in markets, economic growth, and lending. Do you have any plans to do something similar, given that our regulations are so far out of whack with the rest of the international community?
Well, I wouldn't comment on tax policy, but our regulations with respect to banking organizations are not really out of line with international standards. We've worked jointly with other countries to try to maintain a level playing field and to raise standards in tandem. We've really improved the safety and soundness of the banking system. We have a banking system that's extending lots of credit. Credit is readily available to most corporations. Loans have been growing and banks are eager to make loans. They're priced at low interest rates given this environment. So
but clearly they're not borrowing, so interest rates aren't doing enough.
Well,
that's kind of to my point.
So
are you, I guess you didn't answer my question, are you going to be opening up the regulations for comments the way the European regulators have or not? Because you've said you will, but I've not seen anything on it. Will that happen or not?
Well, we're currently going through the Agrippa process and looking at our regulations.
I do want to compliment Governor Tarullo for his comments in the Wall Street Journal recently that acknowledged that small and medium-sized banks do not present the same systemic risk, and therefore he's going to try to reduce their compliance costs. Those are the kind of things I'm talking about, and they're great to see in the Wall Street Journal. I'd love to see them happen. So I want to compliment him on his willingness to say he's going to do that, and I just want to encourage you to encourage that to happen, because if the Office of Financial Research, which is charged with doing the research on systemic risk, did a study a year ago that showed the systemic risk of all the institutions. The 6 largest institutions have an overwhelming majority of the risk in the entire financial system. And I think we should concentrate our precious regulatory capital on those that generate the biggest risk for our system and relieve the folks who don't generate risk from things that don't make sense. And so I was really pleased to see Governor Tarullo's comments, but I would urge you to actually implement those.
I'm very supportive of the things that he said. We're focused on it. I agree that we want to do everything we can to eliminate burden for those community banks.
And my time has almost expired, but I would urge you, and I know that this is our monetary hearing, and we have a regulatory hearing every 6 months as well. And I would urge you that I know that Governor Trillo is an acting regulatory supervisor. He has not been confirmed by the Senate, but I would hope you'd bring him with you during that hearing, which is coming up. Thank you. I yield back to the balance, Mr. Chairman, on my time.
The gentleman